All right. Thanks, David and Anka, for having me here again today. I know you've got a really busy week on your schedule, everyone, and you've heard so many classes. I hope you've got a lot of great information under your tool belts now, or in your tool belts, I should say. And in today's class, what I want to talk about, it really ties into emotion and discipline and how those factor into your trading. The key thing that traders run into when they're trying to develop a system is just a simple lack of confidence in their system. A lot of times, I mean, there's many reasons that you can lack confidence in your system. Sometimes it can be simply because you don't have enough experience with your system. You might be in the process of developing one, so you're still in like a trial and error phase, or you might be switching to trading live and noticing there's differences between when you were trading, just doing paper trading or sim trading, and now trying to go and trade on the live markets. And of course, trading in different market conditions, that can really affect you psychologically as well. And for those of us that have been around for as long as David and Anka and I've been trading for about 25 years now. We've seen many systems and many styles of trading come and go. And one of them that has always stuck around is just focusing on learning to read pure price action. Because when we're looking at pure price action in the market, what we're looking at is just a visual representations of everybody's emotion. So you're seeing the discipline, you're seeing the lack of discipline, you're seeing the confidence, you're seeing the lack of confidence. Those are all being reflected on the charts. And of course, there's a lot of indicators that traders can use as crutches. Some work better than others. Some of them, in fact, most of them, you have to know when to use them, which is also another matter of time of trial and error and building up your confidence. And what I want to talk about today are three of the specific things that I look at that help me understand where I'm at in a trend and how much potential I have in the trend and what my highest probability is in terms of being able to get another really strong impulse move in the market. And those impulse moves are those extreme moves where we see really rapid follow through. I mean, we've of course seen a number of them really recently over the last couple of days. And I'll show you how I predicted those moves as well in live market analysis and how they came to fruition. And we'll look at the things that went into determining where those trends were really getting ready to get started and where we just needed to sit on the sidelines and just wait for a bit. And that's really as big of an important factor as knowing when to take your trade is knowing when to just sit out and wait. So we saw a couple of weeks where we didn't do too much on the larger time frames because we were in what we call a zone of pain, where you're really just dealing with a lot of choppier, smaller time frame setups back and forth. And over the last couple of days, we've come into a much better market where we've seen a lot of the nice, stronger swings coming into play. So when we're looking at trend exhaustion, I'm going to start with just a super basic, basic image here for you guys. This is something that I drew years and years ago. And what's so interesting about it is that we see this exact pattern follow through over and over and over again in the markets, even though this chart is probably about a good 2 decades old or so. When we're talking about a trend, we're talking about the primary directional movement in the markets, right? But we're not just looking at pivot highs and pivot lows, a series of pivot highs and a series of higher highs and higher lows. That's an uptrend, right? But we also need to look at things like the momentum and how many waves of buying do we have in that trend? Momentum as it's shifting. A downtrend is just simply lower lows, lower highs, but there's many ways that downtrends and uptrends and sideways trends can form and develop. And I look at what I've coined the building blocks of price development. And so these are 5 things that I look at in the markets, no matter what time frame I'm looking to trade, that help me understand the trend and where I'm at in the trend. So some of the basic ones are wave counting. Now, this is not your typical Elliott wave counting. I'll show you, what I look at in terms of wave counting as we go on. We look at time development. This is an aspect that most traders are not familiar with or don't pay attention to. And we look at momentum, MOMO, and that's just your rate of change in the trend. And then we also can look at things like volume and then of course support and resistance levels. And those, there's a plethora of those. You can use indicators for those. We can use basic things like previous highs and previous lows. And we'll touch upon some of those here as we go forward. But this is just our basic starting point, because I know we always end up with traders all over on the spectrum, beginners to intermediate to advanced traders. So what are some of their signs of trend exhaustion? Well, one of the very simplest ones to use is to pay attention to the impulse moves themselves. And those are those primary directional moves that we have in the market. So here, for example, is a chart going into today. And what we were looking at over the last couple of weeks was we were expecting, so I do live market analysis every day at noon, and it's open for free on Fridays. And so as the market was trading in our lovely little trading range over here, told my traders, hey, you know what? We had a single wave of selling downwards. I was looking for a secondary wave, a reversal where we would take out those previous highs and then coming back down where we would essentially get a bigger, wider triangle. And as we can see, all of that has played out over the last couple of weeks exactly as I had drawn on the template back in mid-April. But how did it play out? And what were the clues that it would play out this way? Obviously, in hindsight, we get to see that that's already done, but it is something that we discussed before it even occurred. And so when we're looking at our 3 signs of trend exhaustion, the first one we're looking at are these impulse waves. The second one that we're looking at is going to be momentum. And the third one is going to be wave count. So I'm going to kind of take these apart and look at them one by one. But here's the thing, they work together. So you can be looking at one component, but it needs to be in the context of those other 3 components as well. So you're basically looking at all 3 of these and how they fit together. So when we look at impulse moves by themselves, we're just looking at these rapid, stronger than average momentum moves. And these are fractal in nature. So you're going to have the smaller ones, and then you're going to have the larger ones. And the smaller ones are ones where I don't use them as much for going and instigating a trade. So in here, for example, this is a lot of that congestion we were looking at for a couple of weeks. I didn't do much in there on the larger time frames. I took a few scalps on smaller time frames, but not really looking for a larger impulse move because we were in the middle of that zone of congestion or that zone of pain. And we weren't at a level yet where we were seeing ideal time development for bigger impulse moves to start to come into play. So those smaller impulse moves end up being very short. intraday and on the smaller time frames. But if we want something where we can get a bigger impulse move, where we see a nice strong trend day, we need to see something begin to shift where it creates that higher probability of a trend day. Now, one of the things that helped us with the breakdown over here was that we had already had a single wave of selling over here. Now, in terms of trend development, I look at trends in waves of 2 and waves of 3. So if I have a single strong impulse move down, and then I've got a zone of congestion, then I know I've got a pretty good probability that I can get a second wave or a continuation. And that's what drove the selling here as we went into today from yesterday. And so having that single wave of an impulse move is a great predictor that we've got room for a secondary wave as well. Now, what I want to see is impulse moves where there's not as many of them that are the same size. So if I have ones where there's over and over and over again, repeat impulse moves where they're almost all about the same size, that's going to be higher risk because that means that I'm going to be dealing with a lot smaller time frames, choppier moves back and forth, and really having to flip around a lot. And ideally, I don't want to do that. I want to look for the ones where I can get these really strong, substantial impulse moves with a nice, solid follow through without the chop in the follow through. Those are the moves that I want to aim for. So I ideally want to look for reversal patterns that come into play after I've already seen some of those bigger impulse moves. So once I've gotten one of those bigger impulse moves in play, then I know my chances of getting a reversal are going to be stronger, and my chances of developing something where I can go get more back and forth movement can come into play again as well. So if I'm looking at something that is just coming out of a zone of congestion where momentum is really slow, well, that slower momentum means I've got a higher probability that I can get a stronger momentum impulse move coming out of it. So once I have that stronger impulse move in play, if I see continuation patterns with that stronger momentum, then I know that buying those corrections, or in this case, shorting the corrections, have a very high probability of continuing the trend. But if I've bounced to a level where, hey, I've seen about that same impulse move over and over and over again, but I don't have something else working in my favor, like a momentum shift, then I'm going to have a harder time knowing if that is going to be able to break out or not. So for example, in our congestion over here, where we've got all of these little impulse moves, there's no shift in momentum in those impulse moves. You're getting a lot of V's back and forth. Whereas when we look down here at these last two impulse waves, you'll see a stronger move up. And if we look at the distancing between the lows, notice that this high on each of these is ahead of that 50% zone between the lows. So what that is telling us is that even though we're getting some pretty strong impulse moves on the backside, we've got the shorter impulse moves on the upside, overall, our momentum is shifting to allow for this to create a stronger breakout. I also love counting waves of twos and waves of three. And this zone here with this trend, this is one where I call a leg and then a foot. So here's my kneecap. When we have a longer impulse move like this that has two waves and has this kneecap right smack in the middle, goes into this shift with three lows that are really evenly spaced here. This is a very strong reversal pattern called a momentum reversal. And what I'm looking to do is take a break of that channel going into that third low. So the fact that this pivot high on each of these is before the 50% level between those lows, that gives me a strong impulse move on the downside where I can then go and flip and anticipate a much larger reversal coming into play. We have a similar idea over here and up here as well. We get the strong impulse move for the leg. Here we have something that I call a false first high. And we actually have a secondary one here where we're getting this kind of pennant type of formation, but then we go into that more even channel, like what we have here. And that even channel is the channel that we want to look for after it comes off of this bigger impulse move and we start to see momentum shifting. When that channel breaks, that's going to give us a trigger where we can get another strong impulse move coming into play. It's even better if this had two legs up and then you see that shift. That can create an even larger reversal coming into play. Now that same pattern again, you guys, with the stronger impulse move, even though this is shorter, you've got your three little pivot highs here. Now the trouble with this one though, is that if you look at the pivot highs are a little bit too early. So remember, it's flipped upside down. So we would actually want pivot highs that are later when it's coming up into a high. So here's your 50%. We would want that pivot high to be after that. And coming down here, you would prefer for your pivot low to be before your 50% over here in order to get that to flip back around. So you would want a little bit stronger down, a little bit weaker up, a little bit stronger down, a little bit weaker up. And that can help get that turned around. Now, if this is just that first leg up, again, it could have a little bit of a harder time turning around. So we see this popping, shifting the momentum right here. So you're getting this rounding off and creating that second impulse move on the downside. And this is something that I traded right here when we got that channel shifting for the breakdown. And that's because we had one major impulse move to the downside. We had a pop back up. It's holding under 50% retracement, and that momentum is shifting. So the two of those things are helping create that trend exhaustion here for this move to allow for the continuation of the bigger trend right here. And that measured move is what I'm usually using as your target. So that measured impulse move. So this is just today's action and how that measured move there served as the target for the breakdown here this morning. But we've got a lot of examples of this as well. So here, if you look at that template, this zone right here is what's going on right here. It was a little bit more pronounced in the template, but then the move down and then the additional shift here is what is leading to your breakdown here. So it's really just a variation of that template. But a lot of times you're going to see it look almost textbook. And the closer you get to that textbook and the more times you see it, the more confidence you're going to have every single time you start to see that developing. Now, here is this afternoon action. And I want to show you this because we also have a lot of those impulse moves here in play. So in this case, you can see there's a lot of them where they're very similar in size and very similar in momentum. So when you get something that's serving as a continuation, like this breakdown here, which was like what we saw on the previous slide, that measured move there serves as a really good target level. So if you're looking for something where you're expecting some sort of a reaction, what we want to see is, and this is a trick, you want to see this move to at least 50% of that previous drop. So if this is your first drop and this is your continuation, measure this distance here. And on the continuation, it needs to pull through a 50% price extension before you get a pause. So if it can pull through that 50% price extension, you have almost 100% probability it's going to go to 100% extension. So as far as the trend development goes, with this first move here, a single correction, the second drop, it pulls easily into the lower half there. So that tells us, hey, we've got a really good chance that that's going to go to that full 100% extension as well. Now, I often work in waves of two. So even when we see something where it looks like you've got a three-wave move, where here you've got your two lower highs, your two lower lows, I'm often treating this zone as if it's just a tilted correction. So when I'm looking at trend development, I look at it like this. Here's a three-wave trend move. Oops. Clicked a button here. So here's a three-wave trend move. 1, 2, 3. And what I'm paying attention to is how long do these corrections take to form? So that same trend move could also look like this, where you get the corrections next to each other. It can look like this, where they're really close to each other. And it could also look like this. And so you might have what only looks like two waves, but if you're counting them like this, you've got those three waves in there each time. It's just the segments are different. So this concept of time development between the moves in our trend is really important, because once we get two of these segments in a row that are lasting that same amount of time, if we go and we get a third segment, again lasting that same amount of time, it is substantially more difficult for this to put in a strong impulse move. So we often see that attempt at what would essentially be a fourth move being stunted and getting stuck. If it does go, a lot of times what's going to happen is it's going to double that out. So it's going to double it, and then it will put in that fourth move, but that is the one where the trend almost always is going to break the trend channel. Now, if it goes out further than doubling, then you're going to be looking at a situation where you want it to double the entire downside move before you get a continuation. And that's a really core way that a lot of our trends are going to form and develop. So over here, for example, you got your zone of congestion here. You've got another zone of congestion here. One leg up, two legs up, three legs up, really wide middle ground here. But it corrects back again to your channel. Here it has a couple retests at the start of the channel. But the third time it tests that channel, it just can't get going up there to put in that fourth move. Now, a lot of times what this will look like is it'll be a little bit clearer like this, and then it will have that third pullback. Try to bounce, and again, that's where it struggles. So buying that third pullback is much more likely to create a trap. If you wait for it to double, you've got a chance of doing a single flush, but that flush has a much harder chance of actually continuing. It's more likely that that's going to end the channel completely, and then you're going to get a longer correction like that. And this applies to all markets, all time frames. So it doesn't matter what you're trading. And what you're going to find is that some markets, you can see things a lot more clearly. Like you can see the nice two-wave move here out of this nice small two-wave correction. Gives you a pretty good confidence level that there's going to be a support level there. Now, if you saw something like this, where it has a two-wave up and it kind of shifts, it might take you longer to develop the confidence to take that as a continuation pattern. So focus on the things where you have initially, some stronger confidence in it, and then you'll start to learn more of the variations as well as you go forward. So here, this pops up. It only goes to about the halfway point, but it's a little bit above the halfway point. So it still has a good chance of still continuing. But if it popped up and got stuck like here, under the halfway point, it would be hard to make it to a full 100% extension. So it's just a clue that, my trend could be starting to get a little bit more exhausted and I need to be a little bit more cautious. What we ideally want to see on our continuations is for the momentum on the continuation to have that same momentum as the impulse move or stronger. If it's exactly the same, really good shot of getting that 100% extension. If it picks up in momentum, you can usually aim for at least the 123.6% for the price extension. And if this happens to be the start of the trend, a lot of times this will just go into a little kneecap and continue. So you'll get that stronger reversal coming into play too. Let me move forward, speed things up a little more because I want to show you some of the trades here and how more of these kind of work together. So momentum shifting. This is really, really important. So this is showing you the last two trades that I had here today. And I love bringing in trades that are right before my classes because you get to see how things work together. So on something like this, what I'm looking at are two predominant trends on the downside, retesting the low over here, and look at the momentum. So not only do we have a slower momentum shift sideways like this as it's coming into that previous low, but we also had a lot more overlap in here. So here's our two-wave correction and it's tilted. So you get three waves, but it's really the two-wave correction tilted in here. And the same thing here. Here's your first correction. Here's your second correction, but we have that bigger zone in between them. So those are each two examples of those trends that I showed you earlier. But what this does is it shifts that momentum, leads to the stronger move on the upside. In this case, this is my first move. This is my first zone of congestion. Second move, second zone of congestion in here. Third move has two waves on that continuation, pulls back, kind of has a little bit of a choppier start here. So my continuation on the downside is tilted. Another tilted continuation here. And then this brings it into wave three. So that's the end of my trend exhaustion. Now, in a pretty trend, what these look like are this. You'll get that nice, pretty two-wave correction. But you need to start to learn to watch the trends where those corrections can be tilted as well. And a lot of times the clue can be looking at your channels. So how many times are you getting things testing one end of the channel or the other? And that can tell you how many waves you really have going on in there. Now, this told me, hey, I'm coming into trend exhaustion in here because I've got my three-wave count. And here I'm getting a shift. I'm getting that foot developing. And this is that momentum reversal pattern. And in this last part, there's two waves in there too. So this triggered a buy for me right there as we were going into the end of the day here. And what I want to show you on this is there is another slide. Maybe it's not this one. I'll show it to you here a little bit later on. But there's another slide that we had that exact same thing happening on too at a different part on the day. And in fact, this one here as well from this morning, it's that same momentum reversal pattern right here. We just have a little bit of a messier leg down into it. Pops up, we get our Phoenix, we get our third leg, the exhaustion, the shift here, second wave down, third wave down, and again, this tilt in that momentum. So you're starting to get more and more overlap in there. And that's a really good clue that you're starting to see things turning around again. Now, I took this after we had the two-wave correction here, and I hooked my little fib fan from there to there, pulled back less than 50%. So I wanted my fib fan to hit my 50% level there, which it did, and that makes the 76.4% my support level. So now I've got momentum here, and then this overall correction is a lot more gradual. So I now have this bigger channel coming out like this compared to the stronger channel here. And that puts this in as more of a bullish bias. We have it actually as an inverse head and shoulders as well. And then in here, we had this little base. And that is what I used as my entry. You can see my execution, my first execution. I did add into it at a couple of different levels here as well. But that was my first execution. And so look at what is happening in here. We've got our wave counting with the momentum shifting. We've got further momentum shifting right in here with the wave count. And you'll also notice that volume is declining here as we get that slower momentum. So the volume is another thing that is giving me a pro in favor of that as a buy setup. So in terms of this showing trend exhaustion on this pullback, we've got the wave count. You've got impulse moves where the impulse move sizes are very comparable. So you'll notice this size impulse move is something that we've seen happening over and over again already. It's a good size for an impulse move here. In our channel itself, this is holding the upper end of that trading channel, and it's doing it with a base. You know what's even better as a sign that your trend is coming to an end? If this is our downtrend here, and we've got these back and forth moves, it's even better if, let's have this channel continuing. We have this channel coming up, and even if it comes to a new low, so here's our previous low, here's the upper end of where that channel was, so it's breaking the channel here, but it's coming to a new low. That is one of the first signs that that trend is getting ready to go and reverse. So you have that happening in here, for example, to a little bit of a degree where it came up to the upper end of the channel. It went to a new low here, but it's holding in that upper end of that channel. So that's a good example of where we get trend reversals happening and the end of a trend. We've seen a number of those here over just the last couple of days. If I have time, I'll show you a couple more of those as well. And the nice thing about something like this, where we're continuing to see the momentum shifting. So it's a little faster here on the downside, a little faster here on the upside compared to over here, a little slower here than to here, that nice shift in that momentum. And then having this fib fan is I can trail my stop up there, and it takes very little of a breakout for my stop to become break even. So it ends up being a setup where I'm risking very, very little on it. My initial target level was a measured move, but this made it through the 76.4% price extension before it stalled. So that means that the 100% price extension is most likely going to break, and I can get at least to that 123.6%. So how that impacts me in terms of watching this trend development is I'm not going to be as aggressive at taking gains at what normally would be my target level, because this momentum increased here compared to over here. And it made it up past that 76.4 before it stalled. So here is the initial entries that I did, the initial partials, and then adding back in. I did partial in here. And then over here, I had some more executions looking for more on that. I don't know if I got a slide on here, but look at this really light volume, you guys. So as this comes up here, it taps that upper end of that channel, but we've got these two segments of volume declining as it's correcting in here. And that's a really good indication that you're going to get that breakout. Now, what I used as my initial trigger, if you look closely, here's the leg and here's the foot. It was that smaller little reversal pattern happening right there. And then when it did the retest, I was moving my stop up under here. It broke that channel. So that got me into a bigger position than what I was originally using. And this little shift right here, this is why I went ahead and took some partials out, because I knew that I'd have a good chance at being able to add back in at a little bit of a lower level. And I had this position on both the micro and the NASDAQ as well. And on the NASDAQ, I didn't do any partials here. I just did it on the micro. I often do it in both as a teaching aid for my traders. But here's another example showing how, momentum really comes into play and the impacts that that can have. And what I wanted to show you about this is that one of the common problems that traders run into when we're looking at trend exhaustion is the trap, the flush. How many of you have gotten stuck on something like that? You'll go reverse it or you'll buy it because it's above a previous high, right? And you'll think, oh, this is still an uptrend. Let's go ahead and buy it. But it ends up being a trap or flushing you out if you went ahead and went short. So one of the things that you want to watch for to help avoid that from happening or be prepared for it to happen is that if this channel here gets really narrow and you're getting a lot of back and forth action before it breaks down, there's a much greater probability that that flush is going to happen. And I'm going to show you a couple of charts here in a minute where you can see it, where it is very, very common at lows as well. So we see this often in markets where this will already have had a nice three-wave trend move up, and it's kind of trying to push those highs a little bit to try to get a little bit more out of it, and it just can't. And this reversal here, the exact way that this forms is very, very common. You'll get a pivot high where momentum was stronger. You'll get another move, oftentimes taking out this pivot high or retesting that pivot high, where you're thinking, okay, it's a double top and it's going to drop. It will flush, come back down, base, and then you'll get the real continuation of the new downtrend. And in this case, it had another little bonus of doing a two-wave correction there before it continued as well. But this is something where you want the momentum to come in very, very quickly when this happens. Another way we see this happening is it'll come up here and you'll have had this be a really strong trend. You'll get a really rapid pop. It'll start pulling back. Once this pulls back more than a third, your probability of it taking out this low and going even further is very strong. So this can happen with this being a pure base too, popping and dropping. And if you pull up a daily or a weekly chart of the Russell 2K, you'll see that is exactly what happened back at those highs a year or so ago. It's the exact same setup. Very, very common. And again, this is another variation of that template. Here's another one. This is one we were in class and we were looking for this as a short to reverse and to head lower. So class ended, right around here. And this was the first and second trigger that we ended up getting for it. So you can see that same thing. It chopped, it did that kind of flush up, 2 waves down, 2 waves shifted again, and then offered the stronger continuation. So again, 2s and 2s over and over again. Very, very common in the market. This is a Phoenix setup here, part of an inverse head and shoulders. So another example of that. And again, these are things where we talked about them in class in anticipation of this happening because of what was going on. And I record all of my midday classes too. And here's something we were talking about in Forward Focus last week, where we were looking at Pfizer and what the most likely action to come in Pfizer was. So these doodles on here were ones that I had drawn last week. And what we were looking at was that this had a 3-wave trend on the downside, and you'll notice the impulse move size. Very, very similar, right? So we've got that similar impulse move size. We had a 2-wave bounce on the upside. So the expectation was that it would do a 2-wave drop before we would get another bounce. So basically the same thing as over here, except we hadn't completed the drop yet. And so the chart over here is showing the completion of that drop. And it's really strong. So when you're looking for something where the trend is going to turn around with high probability, when you're getting your move down and then you're getting that second drop to the lower low, if this has the same momentum, then it can go and do another move down. It could go into a megaphone and just widen up more. It becomes more of a crap shot trying to hold this and be able to turn back around. On the other hand, if that channel is weaker, there's a better chance that that's going to turn your trend around completely. So where we're at on Pfizer, for example, we don't know if this is going to be able to have another move to a lower low yet because the momentum is still pretty strong on that downside. So it could just as easily continue to widen up, create that bigger foot here, or even go into a megaphone down in here before it would have another chance of doing a stronger buy. And if this goes into a slower correction again, just like the slower one here, that can even give us a nice trigger to continue with that trend. So over here, when it did the 2 waves down, you can see it kind of started to shift. It pulled up. So you got your first pull up here, but this pull-up is faster. And then that shifted with 2 waves to create the buy. So how that shift occurs right here is really important when you get into those exhausted levels with your trend. Here's another one from a morning move that I had traded. So we were looking at the shift here again with the momentum reversal, your 3 lows, except that look at where the pivot highs are. So remember, the ones that had the pivot high and turn around the easiest, this pivot high is before or at the 50% distance between the lows. In each of these, it's after that. So that means that a breakout on the upside going to have a harder time holding it and doing a full reversal. So what you would want to see instead, like what we saw with my first example, is the pivot would be higher and closer to that midway point. So very important difference there that determines what happens next. So because of that, and then getting the 3-wave move on the upside, 1, 2, 3. And again, a lot of times these moves have 2s as well. That ends that trend, starts to shift it here. And this begins to create the reversal strategies again. And this is one I actually got in here, and I ended up getting out and back into it because it had a little bit of an extra touch there at the high. And the reason for that was actually very technical. The distance between these highs was wider here than it was between the second high and the third high. And ideally, if you're looking for the 3 highs for a reversal, that distance is going to be the same. And then that's going to have a better chance of offering an immediate reversal. So this was something that I was teaching my traders in class as well. Here, 3-wave trend, that was the trend exhaustion. And on this one, I didn't hold for more. Don't remember why, but I didn't hold for anything else on that. I just used the measured target level on it. But you can go and get a little bit more when it's hitting that 3rd measured impulse move with the same momentum. But I get distracted by stuff sometimes intraday. So a lot of times I'll end up just taking that exact measured move instead of playing around to get a little bit more. I might be going into class or things like that happening. So here's another one. This is another one that we were talking about live here this week, and this was the expectation that this would break down, and in the ES, we were looking for it to break down even further. So you can see that momentum shifting happening again. And the yellow here was the target zone that I had put on while things were still trading up here. So what this chart is depicting is it's showing that, hey, it's just hitting the target level. And what was important about that is that that was this flush here. So this created the exhaustion, which led to the bounce, which led to the shift in momentum right here, and led to the reversal a couple of days ago. So target level holding, it was the measured move here, and it was the midway zone of congestion right here, which is a really good support level, but it was also a really typical impulse wave size. So that move there was a very typical impulse move size on the larger time frames. So it was looking at both the 2-wave correction, the previous support zone, the size of that impulse move here, which again, very comparable impulse move size, and support levels on larger time frames. And then we were able to use that to flip the trend back around here as we were heading into just last week. So these are all, really important things in terms of looking at the trend development and trend exhaustion. Another really easy tip that you can use too when you're looking at these, here's a much cleaner typical trend. If you have a time correction, your next most likely move is going to be a price correction. So that is something that you can always think about too. And this ended up retesting it, but then falling at that point because, hey, overall weaker. So the overall weakness in the channel, even though we get those little tiny pops on the upside, still made it harder for the trend to totally return back around. Here's another example. Again, sometimes our corrections in our trend can be tilted. So 1, 2, 3 waves, 1, 2. Again, you've got that midway zone here, 2 waves correction in the middle, 2 waves. But having that same amount of time development over and over again, that's another way that you can look to time pivots and breakout points when you're getting to those comparable time developments on corrections as well. Now we are getting close to the end of our session here. So this is just another example. Pay attention to the impulse sizes. So here's your 2 wave corrections kind of tilted in the middle there. Another one's tilted here. 2. So 1, 2, 3, 1, 2, 3, all back and forth. Here's the impulse move where you go for your leg. Again, a favorite reversal strategy as well. So a lot of that back and forth action in here today. Can see the impulse move up, then the shift with the 2 waves. So this actually triggers the breakdown here with the way that that is shifting. So this is just kind of, a really rapid overview of these. And there's a lot more details you can learn. The more you practice, obviously, the better you're going to get at understanding this and having confidence in it. These slides right here are an example of what I was talking about earlier, where when we have a trend move and the momentum is shifting, it starts to get really narrow in that channel. Well, at that point, it's a lot more common that we can get a flush where it can flush it out before it flips over. So if it's a really narrow channel on that third channel, I might trade these small ones as scalps, but I'm also looking at a greater probability that we could still get that lower low before we're able to see something totally turn back around. And that is something that people miss out a lot on when they're trying to time reversals, especially for investments. They're thinking, oh, hey, I've got trend exhaustion here. I've got momentum shifting. I've got a lot of support. So let's go ahead and buy it. And then they get the flush. In this case, your nice 2 wave flush. So a lot of times it'll break that tight channel and then do the flush and then turn around. But very common for that to happen, you guys. So be prepared. In fact, COVID charts did that exact same thing when we were seeing them spiking a year or so ago. And that is about all I've got time for here today. Again, just wave counting here. More and more wave counting. And again, I count more in waves of 2s than I do in waves of 3s. Momentum shifting, very, very important. And just watch out because this is the best kind of momentum shift when it starts out strong and then gets weaker. But when it's in a security where you're getting into kind of like the no man's zone, you're under like $20 a share, then it's easier to get the spikes and, the pop back up. I like to see this when you're in a security that's much more established so that these have a much better chance of, doing a full on recovery versus like a dead cat bounce type of thing coming off of the low. again, momentum shifting. And just showing you kind of the comparison here with today's action versus the chart from a couple of months ago. And they are recording this, so you've got chance to go back and take a look at all of these in slow-mo and really think about what I talked about with regards to how those shifts in momentum can really drive the changes in the momentum. So here was the trade today. This was one from a couple of months ago. Very similar pattern. This had two tilted corrections here. The corrections in here were a little bit more subtle. Initial drop, shift in that momentum, and plunge. So it shows you how, when you have something that really runs into a high, extreme momentum, it's really hard for it to turn over very, very quickly. Even when it does do more of a V, you're more likely to see this choppier action as it tries to get started and see momentum kind of shifting on the smaller time frames to get it where it can build up and drop as quickly. So just another great example of this here. And then this was the one that I was in as we were going into the end of the day. Now, what I want to share with you guys here is my ebook, and this has been an award-winning bestseller for what is it, like 15 years now? The ebook has been updated though. It goes through all of my 5 building blocks, and what it does is it goes through them one by one. It gives you examples very clearly and concisely. It's very much a beginner's guide to my style of market analysis. It goes through different steps for trading discipline. It talks about how I use a trading journal and the different ways that you can change things up, things to look for, tricks that you can do to try to implement discipline in your trading. And there's very much a focus upon traders' discipline and building confidence in your trading. So you're getting, my system from the beginner's perspective. So if I lost you today at all, you're going to have a much more simplified version in the ebook here, and a lot of tools for helping you really stay focused and move forward with your trading. This is something that I've been doing for 25 years now. And the best thing I can tell you is keep a growth mindset. Always focus on learning more and honing your skills. There's no end point in your trading education. You're always going to continue to learn more and to perfect your system. Thank you everyone again for coming. One question from Mike is, how does my two-wave concept fit into Elliott wave? Well, if you're looking at your 5 Elliott wave steps, they've got 1, 2, 3, 4, 5, and their focus is on the two-wave correction here. Whereas for me, I'm counting this typically as wave 1, this as wave 2, and this is my two-wave correction. And then just the way the trend plays out in terms of momentum and the size of those corrections depends on how that actually ends up looking. How many pages is it? I want to say it's around 300. Actually, I've got a copy behind me. I don't really have many printed copies left anymore here. It is 260-ish or so. I've added some stuff on the ebook one, so I'm not exactly sure what the ebook comes to. All right, you guys. Thank you for joining me. David, thank you as always for having me. And I look forward to helping you all progress even further in your trading.